Okay, so looking at the yen, we have a scenario where the price is moving into resistance. If we pull this out on the daily chart, let's go to a clean chart. Find one. Okay, so on the daily chart, we are bullish while being on this trend up, but we're moving up into a potential area of resistance. Okay, so this could be resistance over here. So we've broken this old support, right? So there is a bias, therefore, to the upside, but we're moving into this potential last layer, or even a little bit higher there, on 36.60, 50.60. Okay, so we're moving with some vigor, right, into this. So there are prospects of it breaking, but I would um, count on a correction back into this area of support, of old resistance, now would be expected to turn support. So struggling potentially here, and then a move into support. So I'm going to put an arrow to indicate that I'd expect this to decelerate in and around here. We might have some legs up into, say, 70. Now, if this were to fail as support, then I'd be looking for a deeper correction towards the trend line that marries up with the neckline of this W formation. So coming into here, and I'd be pulling up as I start to see a deceleration on the close of this candle lower. I'd mark my Fibonacci to the highs of today's market to gauge where the 38.2 meets old support, old resistance, draw a support area down into a 50% mean reversion, and I'd be looking for that scenario to play out. And then I would trade it as follows. I'd come down to an hourly chart. I'd look at I'd mark my trend line, and I'd be looking for a break of the bullish trend. So let's just clear up, let's make this thinner and less dominant on the chart. So as you can see, we've got this trend here. I mean, you could probably just pull that in a bit. So just drawing it with a broad brush, but you've got this bullish trend. You'd be looking for this to break, and then this would become a counter trend line. You mark it red for bearish. So a market then is therefore on the other side of this trend, and you'd be looking for it to roll over and move into, as I've said, the trend line, the dominant bullish trend line, support area. And that's where you could start looking for your entry on a lower time frame over here as the market plays out, consolidates, moves into distribution, and you'd be looking for opportunities on the lower time frames to the price action to form bearish structure from which to lean against as resistance to therefore take it down. So that is my outlook for dollar yen, and this analysis that I'd drawn yesterday We're currently seeing the hourly chart move up into resistance, as we've noted over here. So this hasn't played out, but it still has potential to play out. So we've got this current bullish impulse occurring, which, as I said earlier in this video, I'd expect it to peter out and move in to retest the support. And if the support fails, then the thesis will start to build for a correction lower. If the support holds, then you're looking for higher highs, moving into this area of potential liquidity, if you like, call it liquidity, and just make that a bit fainter. It's a bit darker so you can see it, but this area here could be mitigated, this price imbalance between here and here, quite quickly. So you could have a scenario where the bulls stay committed, so you've got this impulse correct in this sort of area of resistance. You'd expect it to come back in to test the bullish trend line or thereabouts and pick up some bids as we attempt to take out the resistance and move up to towards 137.50. Okay, so I hope that helps. So in that scenario, that would be a bullish market trend for the move up.